Hello, yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. This is 16th of November. So today, basically, I'd like us to look at given chart patterns. I want us to see exactly what we expect to be happening on some cryptocurrencies. So we'll basically look at the Bitcoin in itself. We'll also look at others, but we'll measure mostly on Bitcoin because that's where those chart patterns actually apply the most. So the chart on my screen, this is not Bitcoin, this is the SP500. If you didn't attend today's analysis, maybe you may want to look back at it. We had a very good trend line. This is a very good sell from somewhere here. We've not taken a sell already, but if the price gets to this point, then this should give us the ideal place to look for a sell from. So let's move straight to Bitcoin. Just a second. So let's check Bitcoin. So with FreshForex Bitcoin is written as BTC USD. We have it here. It is at 16,000. So what are chart patterns? Basically, what are chart patterns? In your opinion, what do you call as chart patterns? So chart patterns could be shapes, there could be trend lines, there could be horizontal trend lines or diagonal trend lines, or there could be price bouncing off of some shape, or maybe price forming a triangular formation, maybe rectangular formation, or maybe converging wedge formation, or even expanding wedge formation. So in this case, we are going to look at strictly some few shapes, those patterns which normally work out correctly when you trade Bitcoin, and then we see exactly what to expect from them. So most patterns occur on this time frame, on lesser time frames, 1 minute, 15 minutes, or even 30 minutes, or even 1 hour, but rarely do they happen on higher time frames. If they happen here, always they tend to work much better because they make a lot of sense. So the first shape I'm going to look at is the converging wedge formation, and just a blueprint of what converging wedge formation is. If you have two lines like this, then from the lower side the price emerges like this, then it goes up and touches the line we have at the top, and then comes back down. It comes down but does not break below these two lines. Then for some reasons it continues to remain inside those two lines. Usually when something like this happens, this is a very good pattern for a reversal trade or for a breakout trade. So if you're that person who focuses mostly on trading reversals, then you may want to look for a sell position around this trend line, or you want to look for a buy position around the trend line we have at the bottom, which means that if the price touches this point, you pick a sell. If it touches again, you pick a sell. If the price touches the lower trend line, you're supposed to pick a buy, or you pick a buy when the price touches the next trend line. And in case the price breaks out above this upper trend line, we want to see some reversals. We want to see like a retracement before the price can continue in that direction. Or if the price breaks below the lower trend line, then we want to see a retracement back to the same line before we can pick a buy position. So this is one chart pattern which I want us to look at on real chart. I want us to focus mostly on how you can identify it the easiest way possible. I've said the first thing is to go to lesser time frames. Don't focus on mostly on higher time, because it will take you months or even days to find the correct one. So we have this one. Look at this point here. So as I was saying, normally when the price breaks above this upper line, you may pick a buy position immediately. You can just decide to pick a buy position immediately. Or you can wait for price to retrace back to the same point so that you can pick a buy position, expecting that the price will continue upwards at least up to the first touch, which is the point where the price made contact with this line here, the first one, the highest one. If that's not the case, then you pick the next highest one, which is now this one here. This is the next highest high. Somebody may take profit here, or another person may take profit at the top here. So this is a very good example of a converging wedge formation. Let's look for more other examples. Have that, and then we have that. So we have, this is a converging wedge formation. You can see what has happened clearly. It looks like so as I was saying, it looks like the price actually broke below the lower trend line, then it didn't pull back up immediately. This is still okay, because sometimes this could happen anytime the price breaks below a trend line but does not retrace back to the same trend line. It's okay. The only thing you have to ensure is that when you sell it after the breakout, you don't sell it if the price has made a move equal to the start of that shape. That is, assuming this red candle here had actually gone below this line, you could not have taken that sell, because it's like an invalid one. But if it closes slightly below so that you have some space to have your take profit clearly, then you may sell it, have your stop loss above the high of this candle here. So this is another example. Let me destroy it. This is another example. You can see we have a resistance trend line, we have a supportive trend line. The price actually broke below it. In this case, the price went downwards. It didn't pull back as such, but then it went our way, so we still took profits on that price there. So those are some of the few best examples. There's another one. Let me draw it just a second. This is another good one. Of course, not all of them will go your way. Some will you'll enter the correct way, you find everything correctly, but still find yourself at a spot where you're still losing. So that does not mean that the thing is not working. You just ensure that your stop loss is placed in a way that you're not risking a lot from your account than necessary. So we have another example. This is let's see, we have another example here, then we have another there. So we have like a resistance, we have a support, we have a support, we have a support. There is a break below it. So while the price is held after this breakout here, this could have been a very good sell, but in this case here, your take profit should be some fixed value which you come up with on your own based on your risk reward strategy. So you would still have taken a sell after this breakout, expecting that sell to push price much lower. So the other pattern which I normally look at mostly is the expanding wedge formation. So expanding comes from the word expand. That is, as the price progresses into the future, it expands. That is, it keeps giving a wider diameter. That is something like this. So that is something like that.
Daddy, want to open candy.
So we'll have something like this. Then the price enters into that shape from the lower side maybe. So you may look for a break below the lower line so that you continue looking for sell positions, or you may look for a break above the upper line so that you keep looking for buy positions. So the idea normally is to watch for price around these areas. If you see a buy signal from around this line, along this line here, or a sell signal along the upper line, those are always the best place to look for a reversal from. So if you're a reversal trader, you're supposed to look for a sell from around this trend line, or this trend line for a sell, or this one for a buy, or this one here for a buy. So let's get a real life example. On our charts, we see exactly what we expect. So this is a good example. We have a very good example here. This is a very good example. You can see that the price actually attempted a break on both sides of this shape. So in this case here, I would have drawn it. This is the first phase. I would have drawn it like this. Then after this failed one, I now extend it like that, so that we have something like this. You can see it's a very good example of an expanding wedge formation. The price expanded and even broke beyond it. So you could have taken a buy after this breakout here. Your stop loss is along this trend line here, or below this low if you have this low here. So this low is formed like a V. It goes up, comes down before eventually breaking above it. This here could be your best place to place a stop loss at. So that should basically be what I wanted us to look at today. Those are the two shapes which I look at mostly on Bitcoin. I call them my patterns for Bitcoin. I look for them. If the price gets to them, then, or if the price forms them on any time frame, whether 1 minute, 5 minutes, 15 minutes, less than 1 hour. If it happens on 4 hours, which is very rare, it's always the best because you get the most pips out of such trades. So thank you very much. That should bring us to the end of today's webinar. We're going to meet again Wednesday next week at the same time. Thank you and see you.